Hey everyone, it's Lori Atwood with Fearless Finance and today's COVID Facebook Live session. Um, I hope everyone can see me. If you're on, please drop a comment. Let me know where you're from. And I'm taking questions for our Facebook Live event. So please put them in the comment section. I have a few questions that I've already collected from other people who wrote them by email, so we can get started there. But welcome everyone to this Facebook Live session. Today we're taking questions and talking about COVID, the lockdown, and the coming recession, and what that's all going to mean for your personal finances. So please go ahead okay, sorry, I'm just getting used to Facebook. Please go ahead and send me your comments. Let me know you're out there. Say hi. And let's get started. So today I had a couple of questions that I got from clients that I thought other people might find useful. And the first one is about mortgage forbearance. This is a great question. So one of my clients said to me, look, we called our mortgage lender and said we need to have our mortgage in forbearance because, you know, they had the one spouse had lost her job and the other spouse was still working, but they could not make those payments comfortably each month just on his salary. Now, that's going to happen to a lot of people, and there are some people out there in worse situations where both partners have lost their job or they're single and they've lost a job and have a mortgage. So here's the thing I want you to try to remember about this situation. There's no free lunch. There's never any free lunch. So what that means is that if you are putting your mortgage into forbearance for, say, I don't know, as an example, 3 months, right? There are several ways for the mortgage lender to recoup that money that they didn't get over that 3-month period. So one of the ways is that they tack the 3 months onto the end of your mortgage. Say you have a 30-year mortgage, so you'd have 30 years plus 3 months. And that's the best of all outcomes. But it is not necessarily the default outcome for people. So another way the mortgage lender can handle it is after the 90 days, the 3 months that you're in forbearance, they can ask you for what's called a balloon payment, which is one payment of the entirety of the 3 months. Now, for anybody who's either still looking for a job at that point or just started a new job, that is crushing. So you have to be careful that you don't fall into that category with your lender. The other way that they can do it is to ask for just the interest at the end of the forbearance period and tack the payments on, which I guess you could call kind of a hybrid. Either way, if you decide to go into forbearance for your mortgage, which is reasonable to do under these circumstances, you're going to need to speak specifically to the mortgage lender and get an email or some document confirming how that money is going to be paid back. If the only option that the mortgage lender will give you is the balloon payment, I very strongly encourage you to try to do something other than put the mortgage into forbearance, because the balloon payment could, in fact, throw some people into bankruptcy. I mean, it could be huge. So please, please be careful with that. If you have more questions on that right now, I see you guys are out there because I can see how many people are watching. Put something in your comments and let me know, because I know that that's something that's going on out there. So another question I got from Molly in DC. Thank you for this question. So she's a sole proprietor and she has a business and she applied for the PPP. We talked a little about that. I don't know if you remember last week or if you weren't here last week. We talked a little about the PPP program, which is the Paycheck Protection Program. And so the government is going to help you by having you apply for this loan and forgiving part of the loan. Remember, part of the loan gets forgiven after everything's back to normal. And the part that's forgiven, is essentially sort of free money to you. Now, Molly applied for the PPP program. She got accepted for a loan of $25,000. And her question to me was, wait a second, I'm reading this promissory note and I'm getting nervous because it says, you have to let them know if you want to prepay, and there are all these conditions. And my comment to her and to you is, I do not recommend people do the PPP loan unless they absolutely have to. Unless they're going to go under, if they don't get some funds right now to keep the business going for these couple of months, keep your people employed or whatever it happens to be, rent paid, whatever it is. If you don't need it, if you're only losing part of your income, if you are having lumpy income, if you have a spouse who's still on his or her income and you don't need it, don't do it. Here's why. It's not crystal clear to me what the rules are for forgiveness. I could easily see that something you think you're going to be forgiven for is actually going to end up needing to be paid back. Any of my watchers, any of my viewers out there who are doing the student loan forgiveness plan through the federal government, and they're, diligently booking their 10 years of payments, 120 payments, and somehow the counting people have said, no, you actually owe another year. Or, no, you don't qualify if you paid extra that month doesn't get counted. I've heard all of these things. I'm not making these up. It's not crystal clear about this forgiveness, and it worries me. I'm skeptical about it. So unless you really, really need it, I would stay away from PPP. And that's the advice I gave Molly as well. Okay. Anybody have any other questions? Let me know if anything's coming up for you. Oh, I see some more people are joining us. Thank you. Please put in your comment section where you're from. And if you have a question, I appreciate you taking the time to view. Okay, I got another question from Catherine in DC, so let's take a look at that. She said she just refied. Lots of people are doing that right now, right? So now she has some extra money coming in each month because her refi has reduced her by, it looks like, a couple $100 a month. So she's asking me, should she be prepaying the mortgage with that? Or should she take that money and invest it somewhere else that might have a higher return? Okay, here's the advice on that. If you've refied to loosen up some cash flow, which is what most of us are doing, right? There's going to be number one priority for that cash flow, which is liquid savings in a time of uncertainty, right? If you are, just straightening the computer, if you think that your income may reduce, if you are worried that your partner or your spouse's income may reduce, if you are worried about anything having to do with earnings, then any windfall from refining, priority number one, should be put in general savings and kept as cash. High yield savings is fine, money markets are fine, but cash equivalents, cash savings. If you're fortunate and you're not in that position, you think that your income is secure. If you're in a partnership, a life partnership, that person's income is secure, you're not worried about income, then there are a couple things to do with the windfall. If there's no specific goal you have, like, the toilet needs to be replaced in the downstairs bathroom, obviously something like that would take precedence. But otherwise, you can do a couple of things. You can either increase your retirement savings. Woohoo! This is always my favorite one. Increase your retirement contribution to whoever your employer is, your employer plan. Try and open a Roth if you're within income limits for a Roth IRA. That's a good place to put that dough. You could pay 1 to 2 extra mortgage payments a year. I love that because your mortgage, paying off your house, is essentially nothing more than a savings account. So you could do any of those three. If you're already maxing your retirement or you're putting a lot towards your retirement, consider doing an extra payment to the mortgage. Here's the cautionary note here. Make sure when you decide to do an extra payment, or if you're adding extra each month, either way is perfectly fine, that you call the mortgage holder and you say, I want this applied to principal. They don't automatically do that. In fact, they don't at all. What they do is they prepay the next mortgage payment, and that doesn't really help you that much at all. So you want to make sure that you have confirmation that they are putting it towards your principal. Okay, good. So that was Catherine from DC. I see some extra people coming on. If anybody has any questions, please type them in. Got another, this is a great question, actually, from somebody in Maryland who asked, should we be suspending college savings if we're worried about being furloughed or a loss of income? So this is a similar question to one I got last week, which is, should I reduce or stop my retirement savings during all this uncertainty as a way to conserve cash? I'm going to answer both of those questions because it's essentially the same answer. If you're not worried about your income reducing over the lockdown or the impending recession, then I would continue in those savings vehicles as you are. If you are worried, which is probably, I don't know what the percentage is, but probably 80 or 90% of people are worried to some degree, either about the lockdown or the recession that will follow. If you're in that category, you could consider reducing or even eliminating college savings for the couple of months while you're furloughed or your income has been reduced. Maybe you have a second job as a consultant and it's gone to zero over this period, whatever it is. You could consider doing that as long as you take that cash that ordinarily would be put toward the 529 and you put it in general savings. Because if it doesn't get used, then you can put it back toward college or use it for college. If you need it for more basic things like rent and mortgage and, food and electricity and that kind of thing, then suspend the college savings before suspending retirement. Did everyone hear me? Suspend college savings before you suspend any retirement, because there's always some way for Junior to go to college. There's nothing we can do if you get to your 60s and 70s and you have not saved appropriately for retirement. Okay, that's really important. So if you're doing automatic savings for college and you're doing it for your retirement plan, the priority is by far retirement. Okay. But of course, if you don't have to suspend them, don't continue to do it.